So every month here on the channel, I'm updating you with the latest accounts, the new opportunities for you to find higher paying rates for your savings. And every day over at becleveryourcash.com/savings, myself and the team are updating our best buy table so you can track which ones will pay you the most amount of money. But what I want to do in this video is, because we're at the start of the year, is rather than just run through all of those, I want to take a step back slightly instead and just focus on the types of accounts you might want to have this year and share with you the best paying options for each of those. So if you are using the new year as an opportunity to sort of refocus where your money should be sitting or make sure you haven't missed out on something, this will help you do that. So let's start off with the type of savings account which I think everybody needs. And this is an easy access savings account. As the name suggests, it's one where it is easy to access your savings. There are other accounts out there which will lock your money away, and that is no good for this initial part of your savings that you need to have. It's fine if there's money you know you won't need to access it, but that's something to look at after you've got this easy access account in place. And this is fundamentally, in the first instance, this is for your emergency savings. If something goes wrong, if something breaks, you need to repair it, or worse than that, you can't work for some reason, you're too ill to work, or you lose your job. Some money that's going to cover the bulk of those essential expenses, your rent, your mortgage, your bills, your food shop, the stuff you need to get by. And obviously that money, if something like this happens, does need to be accessible. Potentially you could have some of it in notice accounts. If you think you're going to be out for a stretch, you could use your easy access account for that emergency and then use one of these notice accounts, which, as the name suggests, you sort of give notice for when you'll receive that. And that could be anything from 30 days to 60 to 90 to 180 days, whatever it is. I think in this talking here about the emergency savings, really, you don't want to go more than 90 days on that, on the shorter end. You could have some in there. But broadly speaking, you want to have this cash where you can grab it when you need it. The amount you want for these emergency savings, broadly speaking, if you can do this, and again, not everyone's going to be able to do this, but the general sort of rule of thumb is, can you aim to get 3 months to 6 months of those essential expenses covered? And that's because if you do lose your job, that's often how long it takes for you to find a new one for whatever reason. I would suggest if you're on industry, your job is something which is a little bit more irregular in terms of payment, you're a freelancer, for example, if you can, you might want to build up an even bigger bank of cash saved up there to kind of get you through those lean periods. And, we only have to think back a couple of years to the pandemic where that was, people who had that, really showed how vital it was. That's kind of the bulk of your emergency savings that you want to have. Again, you might not be able to do this, but it's something to aim for at least. But then obviously there are other money you're going to spend because there are things you're going to spend money on. It could be a holiday. It could be you want to have a new handset, new telephone handset, mobile phone. It could be something bigger than that. It could be buying your first home. It could be a wedding, and it's kind of big expenses. So from smaller expenses that you're saving up for that you're going to spend to those bigger ones, which are going to take a long time. So obviously those ones as well, you're going to want to have those in something that is accessible. For the really big stuff, which can take longer to get there, again, maybe you can think about locking that away. But broadly, I'm going to focus here on emergency savings and kind of shorter term kind of larger expenses. Some people call this sinking funds. That's pretty much all you need. Anything beyond that amount, you have to total it up to yourself to know exactly what that looks like for you. And again, for some people, that's going to be a while before you get there. But anything beyond that, broadly speaking, you don't want to have it in a savings account because although rates have been really decent for the last year and a half, and they are finally beating the rate of inflation, which is something which you've not seen for a long time, you're generally in the long term, talking 5 years more, you're better off putting that money into the stock market by investing it or putting it into your pension. Remember, there's all sorts of tax relief and free money you can get by putting more into your pension. Or if you do have a mortgage, maybe it's overpaying your mortgage as well, not only to get you mortgage free, but potentially lower what's called the LTV, the loan to value level, which is basically how much money you have in the house when you go to remortgage, might get you access to cheaper and lower deals. So really, again, here, I'm talking about not huge sums of money to have in savings. Yes, your situation might be different. You might have a reason to have a lot of money, but I'm focused here on what most people need. And if most people only have 3 to 6 months of essential expenses saved up, the balance needed is going to be relatively low. Not super low, but relatively low. So let's talk about what the best account for you, I think, in 2024 in terms of easy access accounts, at least at the start of the year. Don't forget, my monthly updates will tell you if this changes, so make sure you hit subscribe if you haven't already, and check out this playlist here, which will give you the most recent savings videos as well. My top pick for this year is the Santander Edge Saver. This is an easy access account which pays a really, really decent amount of money. Let me get you my article up on screen here so you can see some of the information. This one, as you can see here, pays 7% AER. This is the best you're going to get on easy access account by a significant amount. As you'll see in a minute, the next one's best one's about 5.2% more or less. So this is a big, big, big jump up. So brilliant, yeah? You go for it? Yes, I think it's worth doing. But there are a number of provisos, a number of little things you have to be aware of. I have got a whole video which I will link to above where you can, when this account launches, you can read more about it and watch that and find out exactly how it works. But very briefly, the things you need to know about to get this account. One, that rate is only for a year. After 12 months, it will reduce by 2.5%. So really, in that time, you want to look and see what other accounts are paying and see if you're better off moving your money over there. But for a year, again, still can't be beaten right now. The other thing is this is only going to be payable on the first £4,000 you have saved there. Now, again, for most people here in the UK, that is not a problem. They do not have more than £4,000. But if you do, then obviously you could have this account and then get another one to top it up, the rest of the money, or you potentially just screw this and just have all your money in another account which has a lower rate, but you aren't restricted, so you're all in one place, okay? That's another thing. The other thing you need to be aware of is to get this easy access account, this Edge Saver, you need the Santander Edge current account. Now that current account comes with a fee. It's £3 every single month. Now, most of you, that's not going to be a problem, okay? Because that £3 a month will be covered because you can earn cash back on your bills, your council tax, your energy, your broadband, all those kind of things. You can earn cash back on that, and that will cover that £3 a month fee and make you a little bit of profit. So it's a good win there as well. However, if you do not have pay bills, maybe you don't pay bills at all, or maybe you've got another account that covers you cash back on bills, the Santander 123 or 123 Lite, which no longer exist, but paid higher rates of cash back. In those situations, then you do need to factor in what that fee difference is going to do to your overall rate of interest, because it won't be 7%. But as long as you have at least £2,000 in there at the current rates, then it's going to be the same as what you'd get in the other accounts I'm going to come to in a minute, the equivalent of 5.2%. And obviously, ideally, you want more than that. But even though if you have that full £4,000 in there, then you're still going to be getting above 6% again, which is better than you get elsewhere. What you can also do with this account is potentially you can extend it beyond that £4,000 minimum, because that's what you can get with your personal Santander Edge current account. But if you are in a couple and you both open up your own Santander Edge current account, so one each, and then open up a Santander Edge joint account, so that's between you, there are 3 different current accounts there. Again, you've got to factor in the fees that come into play, but with that, you can open up an Edge Saver each, and then on the joint account, you can open up another joint account each. That's 4 of these Edge Savers, so potentially that's £16,000 you can have in there. Yes, it won't be at 7% because you won't get cash back on the bills on those extra accounts just on that first one, but it's still a very, very healthy amount which cannot be beaten anywhere else. Okay, so going, Andy, you said that this was going to be simple, a nice easy access account, and I appreciate there are a lot of complications there, but it is the best paying one, which is why I'm sharing it with you. If that is too much of a faff, then let's have a look at these ones. These are the other easy access options, and these do not have, at least on the whole, have those same restrictions in terms of how much you can save in them and fees and all that kind of stuff. Okay, so you get the rate that's there. Top of the table right now at the start of the year is Metro Bank, 5.22%. You do have to add £500 to this account within the first 28 days in order to get that rate. This one is also only for a year. After a year, the rate will drop massively. But again, top one out there right now. Then we've also got Ulster Bank at 5.2%, which is part of NatWest and RBS. Kahoot, couple of options there. They're part of Santander. So again, depending on how much you've got to save as your initial deposit, again, some decent options to consider there. I've also included here the Barclays Blue Rewards Rainy Day Saver at 5.12%. This was the top pick last year. Now it can be beaten by all those other ones. But if you are a Barclays customer with a current account with them already, then it might be worth looking at that rather than open up one of those other accounts. And when it comes to ethical banking, something I always think it's worth considering. This is where ensuring that the money you have saved up in your bank isn't going towards some of the things that you personally might disagree with. So a good example here is a lot of the money you might put with your bank, the bigger banks at least, they could use that to go towards funding arms manufacturing businesses or funding new oil pipelines, things like that. If you're worried about that, there are some very specific banks that are green, but also a building society is a really good one to look at. And the top paying one here, currently Leeds Building Society, 5.1%. A couple more to share with you very, very quickly here. I mentioned about notice accounts. These are good options. Again, if that emergency fund, you've got some in an easy access cash account and you want to get a slightly better rate on some others, and you can know that you can get it in 2 months or 3 months, which I've only included 60-day and 90-day notice here. You can see Monument currently paying 5.1% on a 2-month notice. First Save currently paying 5.4% on a 3-month notice account. Again, these are the top ones right now. I'll repeat it again because it's so important to show you this. BeCleverWithYourCash.com/savings is where you'll see more options, but also any rates that change on a daily basis, as well as those monthly update videos that I'll be doing here on the channel. Okay, so that's your first account, or maybe you have a couple of accounts in that section, but that's the easy access account where you can get your money at any time. That's probably if you've got a lump sum, that's where you put it, okay? But what about new money you're saving every single month? You know, that's often a great way to make sure you are going to be saving. I did a video on this recently, so check that one out. Ways to make sure you save throughout the year is to commit to adding money every single month. And one of the best places to do this is in a regular saver or a monthly saver. The banks call them one of those two names pretty much. And not only are they good because they get you in the habit of putting money into an account every single month, they're often paying much, much, much higher rates than everything we've seen just now, other than potentially that Santander Edge Saver. If you don't fancy that, or you want to add more money on top of that, then these can be your best options. Now, you are often, people get confused with the interest rates with regular savers. I've got a whole video and an article taking you through how they work. So please, if you are confused, do check that out. Makes it much, much clearer. People think it's a scam. There's not a scam. These are giving you that rate of interest. It's just only for when the money is in the account. And because if you're only adding money in month by month, obviously the total balance at the end, some of it's only been in there for 1 month, some of it only for 2 months, rather than the full 12 months. But it is still a really, really good way to get the best possible rate on your savings. And as I say, a great way to ensure that you do keep saving. Something else to be aware with this one is that there might be variable rates and some might be fixed rates. And same with those easy access accounts, they're all variable. But the fixed ones, I'll tell you about a couple of them here. They're also going to lock you in at that rate, which is not necessarily a bad thing to be doing right now, because we are anticipating there to be cuts to the base rate in 2024. If that happens, those easy access accounts, those rates will likely drop. Also, same with any variable rate, but if you get a fixed regular saver, and I'll tell you about some of those, then that rate is locked in. Obviously, the opposite happens. If a rate goes up, you won't get that hike, but I think it's very unlikely we're seeing any of that. So it's a good thing to be going for at the moment. You also need to check out in terms of access. Some of them will give you access. So it might be to use this instead of an easy access account. Other ones might lock you away. You can only access the money after 12 months, which is when you get paid the interest. So what's the best one here? Well, I've gone for this one from Nationwide at number 1. I was tempted to put it at the second, but I put it as the number 1 to go for, the top one to go for, simply because it has that high rate of 8%, which cannot be beaten anywhere. This is the highest paying savings account available here in the UK right now. It is variable, so again, it could drop, but that is a massive amount to be earning on your money. Now, it is only on £200 a month, which for a lot of people, that's going to be way more than they can save every single month. Okay, so I think it's a really good option for you. Obviously, if you can afford to save more than this every single month, you might want to have more than one regular saver, or you might want to consider one of the ones which has a lower rate but lets you pay more in, because you'll end up with obviously more interest at the end compared to having just a smaller amount of regular saver and the rest in easy access, although it can be pretty fine margins there. Now, this one does require you to have a Nationwide current account. Okay, so again, it's a bit of a drawback there. I'll tell you about a couple in a moment which don't require you to have a current account. But again, based on having this for a year, putting that £200 in every single month, after the year, you'll get about £103 in interest. 8%, okay, will be on the money in that account. Cannot beat that one, which is a really, really good one to go for. Now, my runner-up is the First Direct regular saver. Has a lower rate, 7%, and this one does also require you to have a current account, but you notice there in the graphic there, this is fixed, so you will get that whatever happens to the base rate. I'm not saying the Nationwide one, 8% will drop if the base rate drops, but there's a chance of it. This one locks you in, plus you can pay in a little bit more every single month, £300 is the maximum you can add in. So actually you'd end up with more interest with this than you would from the Nationwide. What's also good about this one is that it does currently have a £175 bank switching offer if you don't already have the current account. So you can switch into it, get that 175 quid, then open up the regular saver, potentially get yourself another 135 from this by the end of the year. Now, there are some others which I'll show you in a second. Now, these ones, as I say, are potentially good ones to go for if you don't have a current account already. So this top one here, Gatehouse, 7% again, so the same as First Direct, however, it is variable rather than fixed. But this one, you can open it up anyway without a regular saver. So it's a good one to go for there. Another top one here, Club Lloyd's, their monthly saver, 6.25%. So a lower rate, but you can put in a larger £400 every single month. And again, that one is fixed. The NatWest and RBS ones are worth looking at as well. If you have current accounts with those, so I should say the Club Lloyd's, NatWest and RBS ones do require you to have current accounts. But the NatWest and RBS ones, they do not end after a year. You'll keep getting that rate year after year after year. So they're not bad for you to continue saving despite that small £150 cap you can put in every single month. Instead, you can have one at NatWest and one at RBS. Now, I'm not going to talk about fixed rate accounts in detail in this particular update. I will do them in the next one next month, or you can find the latest best buys over on beclareyourcash.com savings. Because what I will move on to next is once you've got that easy access account for the money you need to be getting hold of for your emergencies, for that planned spending. And once you've got a regular saver for the new money you're adding to every single month, there's a good chance that you might be getting closer and closer and closer to the top of those tax-free allowances that we have for interest here in the UK. Now, this has not been a problem for us in years gone by, but the high rates we've had right now means you only need £20,000 saved at 5% to earn £1,000, which is the personal savings allowance if you're a basic rate taxpayer, or half of that, just £10,000 at 5% if you're a higher rate taxpayer. And of course, if you're an additional rate taxpayer, you don't get any of this personal savings allowance at all. So then you might want to be thinking about, okay, well, what do I do with my money? Where should I put my cash when those allowances are filled up? So I want to quickly share for you. Remember, still going back to what I said at the top about how much you actually need to have in savings. So you might not, for most people, this might not be an issue because you don't need or can't have that much in savings. But for those of you who do need to have more available to you and you've used up those allowances, where do you go? Well, you've got a couple of options. The most obvious one is an ISA. I've got a whole video taking you through how ISAs work, how ISA allowances work, but fundamentally you can pay £20,000 into an ISA every single financial year and all the interest you earn is tax-free. So that's a kind of a good win there. Where you may be careful about this is if you do have large amounts of money, you might be thinking, as I suggested before, that you might want to be investing some of that. And if you are investing, it makes sense to prioritize your ISA allowance for a stocks and shares ISA over a cash ISA, simply because there are smaller and fewer allowances out there to protect the gains you make from ISAs. And there's the opportunity, or the potential at least, for you to make much, much larger gains over a longer period with those than you would in a cash ISA. So again, you might want to focus on a stocks and shares ISA before a cash ISA. But assuming you do want to go for the cash ISA, you want to use that, get up to £20,000 every single year. These are the top picks for you. The winner right now, again in January 2024, for an easy access account that anyone can open up, well I say anyone, it is app only. Should say if you are interested in one which is branch or post option, you might be looking at lower rates on the whole with these different ISAs, but again, they're all listed on the website. Top one right now, this is from Zopa, their Smarts ISA, paying 5.08% for an easy access ISA. Again, if you put £5,000 in there, you're looking at about £254 in interest over 12 months, which is really, really good. Interestingly, with this one, you can split it into pots as well, which is a nice little feature for savings. So that ISA doesn't have to be in one thing. And also, this is going to be less of an issue when April comes around. You can, if you want to, have some of your money in this cash ISA in an easy access one, but also in a 1-year fix or a 2-year fix and things like that, which normally is impossible to do because you can, well, in this financial year at least, you can only pay into one cash ISA in any year. So that won't be irrelevant soon, but it's a nice little feature to have. If you do want to fix, then I could share this one here because again, you've got to have a lot more money in order to go over your allowances. So you might be more willing to lock this away because you don't need access to it. The top paying fixed rate ISA right now is from Virgin Money. This is, however, an exclusive to current account holders at 5.25%. But it's certainly worth having a look at that because, again, that's a really, really decent amount of cash you're going to be able to put into ISAs. And I say both of those do allow transfers in. If you already have an ISA, transfer it across to get a better rate. I will do another update on ISAs and the best ISA rates in much more detail around March time as more people look at moving their money into ISAs, having done it the same sort of time the previous year. Now, there are some alternatives that I do want to quickly share with you here as well that are worth looking at if they don't work out for whatever reason. The top one right now in terms of easy access after Zopa is Leeds Building Society, 5.05%. There is a limited access one available from Moneybox, but only a little bit more than that. So I would go easy access over limited. And there is a slightly higher paying one, 5.11% from Metro, but you do have to go into branch to get that. I mentioned that 1 year fixed from Virgin Money. Low one, but that Shawbrook Bank, 5.01%. 2 year Post Office Money, 4.9%. Again, loads more of these listed over on the website. Now, that's not your only option though for tax-free, and I'm sure many of you know this. So I want to quickly share this one with you as your tax-free account. If you have used up your ISA allowance already, or for whatever reason, then maybe it's worth considering premium bonds. Again, I will do another video very, very soon taking you through in detail through these. But as you can see there, the rate on premium bonds, 4.65%. That is the prize rate. It does not mean you will get this, okay? There's a chance that if you have the full 50K in there, which is the most you could put in, that you might get close to that. Or if you're really lucky, you could win £1 million. But most people, they will get lower than that. And the less you have in it, the greater the chances you don't win anything at all. So these are not for most people, but these are, I'm including it in here because if you are an additional rate taxpayer or you have you need a huge amount of money in cash savings, then that is where you will probably want to go once you've used up your easy access accounts and regular savers and you've used up your ISA allowance. Now, there is one last account that I do want to talk about here that is worth covering, which again is not going to be for everyone, but if it is relevant to you, it is vital. It's going to make such a big difference. This is the lifetime ISA. If you have not bought a house yet and you're under 40 years old and that house that you are going to buy is likely to be costing less than £450,000, which is a frustration, which a lot of people, this makes it a problem, it's well worth getting a lifetime ISA because you will get a 25% bonus on the money you put into there. The most you can put in every year is £4,000, but that means potentially that's £1,000 free money every single year if you keep doing that until you buy that first home. You can also keep it until retirement, but that's generally not the best thing for people. I have got a separate video taking you through lifetime ISAs, how they're explained. So please make sure you do watch that one or read the article on the website for all the ins and outs, because it does take a whole video in order to explain all that. But the top one right now, this is with Moneybox, 4.25%. It does drop after a year to 3.5%, but you might be able to transfer that in if there's a better paying account at that time. If you're starting from scratch, get that. Even putting £1 in your lifetime ISA is going to be great because you need to have it for a full year, full 12 months before you can use it. If that is the case though, because you only get this top rate from Moneybox for a year, I would suggest that you actually instead open up a different one at a different provider, because again, you can transfer these ISAs so you can build up the money, have it working away, but when you are able to put more money in there, you can put that cash in. So there you go. They are my top savings accounts for 2024. Yes, I know I could have talked about so many other options. I'll do that in the next update, which will be in probably just a couple of weeks' time at the start of February, or you can head over to becleverwithyourcash.com/savings for those tables which we update on a daily basis. My name's Andy Webb. Thank you so much for watching. Check out these videos here for more ways to get the most from your savings.